Hey, it's Jerimiah Taylor, and we just got the new numbers from the National Association of Realtors about the quarter one performance of the US housing market. It's a really interesting and mixed announcement today. I'm going to share that with you. I'm going to help you understand where the market is going so that you can take action and make the right decision about your housing plans this summer. So, what you'll see here in this first chart, the National Association of Realtors came out and they told us seasonally adjusted home sales rate, so this is the run rate for the year, came in above expectations at 4.44 million for the month of March. Now, what's interesting is we have this kind of tale of two markets thing happening today. And you'll see in these columns that if you're on the West Coast, that number is down actually about 30% year over year. We're selling 30% fewer homes on the West Coast than we were this time last year. Whereas if you're in the Midwest, that's only about 17% off of where we were last year. And if you're in the Northeast or the South, it's about 20%. So what's going on here? Well, it's an affordability problem. If you look at this next chart, this shows you what is happening with the price of homes in these same areas. The West Coast is leading the home price correction, with prices actually coming backwards year over year by 7.5%. Well, what you'll notice is homes on the West Coast are quite a bit more expensive on average than they are in the rest of the country. Now, in the Midwest, where homes are much more affordable, you'll see prices have actually gone up almost 2% year over year. So what's going on? The answer is interest rates. Now, interest rates drive affordability. We haven't seen the wage growth that we have seen in the last 2 or 3 years in the first quarter of this year. So it has really put a clamp on people's affordability and their ability to purchase homes and pay the prices that people are looking for. All in the first quarter, year over year, what we're seeing is about a 1% negative total change in home prices. Now, the reality is, if you're in certain parts of the country, that may feel a lot more like 15 or 20%. And if you're in other parts of the country, that may feel like home prices actually went up, not down, and this is crazy. So what does NAR think is going to happen? Well, they're actually continuing to revise their numbers up. When you see this line graph here, that little black bar at the end on the right, that is showing you they're saying for April, they're expecting this number to climb to 4.55 million in seasonally adjusted home sales. That's actually below average for the long-term trend, and it's far below where we've been for the last few years. But it is a sign of life that the housing market is starting to come back, and we are seeing a spring pickup in the number of homes sold. So what's going on there? How's it happening? Well, the answer is, I think people have kind of made peace with what's happened with interest rates. They understand that home prices are not going to correct by 20 or 30% like we saw in 2008. And so you're starting to see people make life decisions and move. Surprise, right? People want to move. People need places to live. And so they are moving forward. Now, what could change this is interest rates. So we've shown you this graph before. Here it is again. When you look at the blue line at the top, that is mortgage interest rates for your average 30-year mortgage interest rate. The orange line in the middle, that is the average 10-year treasury yield. These are both week by week. And then the gray line at the bottom is the delta between the two. Now, the reason we care about this is if you look, that gray line kind of floats along around 1.5 to 1.75% most times, meaning your average 30-year mortgage interest rate's about 1.5 points higher than the average 10-year yield. But then in times of economic turbulence, and you'll see big spikes 2008, 2020, and now today, where things like inflation or just there's generally more conservative investments being made because people see the markets as having more risk. They want a higher yield when they put their money to work. And so what's happening today is that spread is almost 3%. Now, it's come off of its peak of 3.1 down to about 2.8 here at the end of the first quarter. But what you should understand is that when this returns to its historical norms, we don't need the economy to falter. We don't need the 10-year yields to come way down. Today, that 10-year yield is 3.58. The average 30-year mortgage rate is 6.39. That's because that spread is 2.8%. When we start to hear the message that like, hey, we think the economy is okay, we think we got inflation under control, you're going to see that spread come down. And if it returns to normal levels, that means without any change to the 10-year yield or any faltering in the economy, we should see mortgage interest rates at about 5.3%. That's where you would expect them to be today. Now, what happens if rates go to 5.3%? You're going to see home prices start to move back up more quickly. You're going to see sales volumes, meaning the number of homes selling, start to move up more quickly, and you'll start to see things take off again. So it's an opportune time if you're thinking about buying real estate, because there is a little bit of a feeling of a lull in the market. Now, if you're in the Northeast, you would correct me and say there is no lull here. We have 60 offers. It's crazy. But there are pockets of the country where there is an opportunity window that is open right now. That window will close as rates start to come back down, affordability increases, and you start to see velocity pick back up. When exactly does that happen? Nobody knows, but we can tell you you're in the window now, so take action now. Now, if you're thinking about selling, this is also good news because inventory has remained historically low. Across the country, we're still seeing under 3 months of inventory, which is a very strong seller's market. So if you price and present your property appropriately, chances are you're going to get a great price for it. Hope this helps. Please remember to subscribe and like the channel. Post in the comments. Would love to hear your feedback about what's happening in your local market.